hedge funds and institutions are going to be receiving massive margin calls starting on Monday, November 1st. This does weirdly coincide with the Fed's meetings on November 2nd through November 3rd, where we are widely expected to get tapering announcements as well as a possible but improbable rate hike increase. So that's very important. That's going to be a main focus point of this video because it will possibly directly affect AMC. I tend to think so, but anything is happening in the current marketplace. As well as that, we're going to go over the Ortex data, the 13F filings, because we are seeing Goldman Sachs, we're seeing Wells Fargo, we are seeing a lot of other big institutions buying brand new positions of AMC stock, much the same way they did back in May before the June rally. We're going to go over just everything you guys need to know. So if you guys get some value out of this video, hit that like button for me, help spread this video out to as many people as possible. I do love and appreciate every single one of you guys, and it is Halloween, so happy Halloween. Hopefully you guys enjoy some time with your family. Let's not waste any of your time. Let's get straight into this video. Like I said, consider subscribing to the channel if you are new here. So AMC on Friday up 0.4% on the day, and after hours up 0.65%. This was a solid move in after hours, and usually when we see these bigger moves in after hours, we tend to see that continuation coming on the next day. In this case, Friday was the last trading day, so Monday is going to be a positive day in my personal opinion. Now let's just run through all of the data real quick that you guys need to know, and then let's talk about this margin call situation, because I'm sure that's what a lot of you guys are really concerned about. And let me just say, first off, before we get into any of this data, this does pertain to the margin call situation and the Fed meeting, but we still don't know what day earnings are going to be. A lot of people think it's going to be on Monday. If it's not on Monday, who cares? That gives you more time to load up on shares before we do hit all-time highs, in my personal opinion. But Robinhood, these other investment apps, they're saying the estimated earnings day is going to be November 9th. Some people are saying November 7th. So it's widely unknown what this day will actually be for earnings, but you want to be fully invested in AMC, in my personal opinion, before earnings. You don't want to be one of the FOMO buyers buying into the stock. You want to be somebody that already owns AMC stock, and that's why I've been acquiring almost, daily additional shares of my AMC position, even at these higher prices, because I got into this well before the June rally at about $10 per share. Some of my position at about $5 per share before even right after the second rally, or the first rally, I should say, and I'm still buying as many shares as possible of AMC, as well as my other long positions as well. So you definitely want to be, long story short, you want to be a part of AMC before earnings come out and before we get this bombshell information. Now let's get straight into the data. As far as the Ortex data, 16.89% short interest of free float, 86.41 million shares that are sold short, very high amounts, but keep in mind, we did get the exchange reported short interest data back here on October 26th. That was just about 5 days ago. We did have 92.24 million shares that were sold short, 18.03% short interest. And what I want you guys to know, take this daily update amount, this estimated short interest, with a huge grain of salt, because we did not see any rallies since obviously October 26th or the settlement date of October 15th. So to think that 1%, 1.5% of the free float on loan was covered in this time, I don't think that's the case. So I think the estimates are pretty well short compared to where we are currently at, and this is not even considering the naked short positions or the synthetic short positions, or just hedge funds using the option chain, manipulating it to make it look like they have covered on their short positions. What I want you guys to know, it does not matter what happens. There is still an obligation to return legal shares to their rightful owner, so they can make it look like they've covered all they want. Once we do start to rally, that is even better, because the short interest is going to be a lot higher. So that is very important that you guys need to know. Share utilization is at 86.66 million, decent level, kind of high, kind of in the middle. We've stayed relatively unchanged over the last 7 days. 7 days ago at 86.01%, so not too much change right there. Free flow on loan at 20.44%, meaning there's a decent amount of shares that are still out on loan that have not been sold short yet, but I don't think they're going to sell these shares short, just because it doesn't make a lot of sense to be doing that. If you're subscribed to this channel, this is something you are well aware about, and this is a huge part of my theory why I think we're going to hit all-time highs on earnings. It's very simple. We moved up 60% in March, we moved up 1000% back in May, and we moved up 100% back in August 9th. So if we even see a 100% move from here, that puts us at $70 per share. That is virtually all-time highs, but I think you're going to get some major announcements like Adam Aron did say in that CNBC movie, right? I filmed the whole thing, put it on my channel. You guys can watch it if you haven't seen it already. But he said in the next 6, 12, 18, 30 months, AMC is going to be a different company. It's not just going to be a pure theater play or a pure movie play. That is very exciting. We are looking at the potential to see higher multiples of valuation on this stock. And that means if you have a short position in AMC, be careful, because we are coming for you, baby. All right, so that's what you guys need to know from that. I don't expect anything too crazy. Like I said, not too much shorting. I don't expect a big move to the downside or the upside until earnings, unless this whole Fed situation does play into a market uptrend or a market downtrend, but we will talk about that. Expect to stay in between $35 and $40 per share until we get an announcement, until we get a reason for FOMO buyers to buy into this stock. So now let's move on to the stock tracker data, and then let's get into the 13F filings, and then let's get straight into this margin call situation. So we're looking at for next week, nothing crazy at all. About 4,000 calls that are in the money, 68,000 calls that are out of the money, and then nothing too crazy, obviously, until November 19th. That's the monthly expiration date, and we're gonna have earnings hopefully before that it is confirmed, and this is really the option chain that should start to populate. So if you're somebody that does trade options, I don't think it's good for the whole movement. I don't think it's good for your personal finances, but you guys can do whatever you want. I personally would not buy any options unless it's the November 19th or further out options, just because we're probably not going to see these weeklies populate too much. You're probably not going to see a huge increase in value, and the premiums are still pretty high on AMC stock. But on November 19th, 7,200 calls that are in the money, 173,000 calls that are out of the money. Definitely pay attention to that, how that does populate. After that, obviously December 17th, and then January 21st, 2022 is going to be the really big options expiration date, which we can see a very, very large gamma squeeze. So that's what you guys need to know from that. 13F filings, take a look at this. Wells Fargo, another 28,407 shares. Goldman Sachs, 23,607 shares. Goldman Sachs Innovation Equity ETF, 27,555 shares. Goldman Sachs Innovate Equity ETF. Very interesting. They're buying tons of AMC stock, as well as Simplex Trading, like I've called out. They did not do anything with their long or short position. I believe they have the third largest short position, as well as a very substantial long position as well, about 1.522 million shares that are purchased at $55.45 per share. And the fact that all of these firms, virtually all of these firms, have held onto their positions or even added more, that is a great sign, because most of these firms are averaged in at about 40 to 47, even $50 per share in some cases. Like we just said, $55.45 per share. If you're a portfolio manager, you're not going to hold on to a stock with a massive position if you thought it was going to go down in value and never regain the price that you at least paid. So very important right there. Let's get out of the boring stuff. Let's get into the margin call situation. And this was actually reported on Twitter. I'm sure you guys actually did see this, so I don't want to get into that too much, but this is the DTCC, and you guys are already aware of what that is, so we're going to skip past that part. But this is to all participants. It went out on October 25th, 2021. Category settlement from DTC Risk Management. And then it says changes to DTC collateral haircuts beginning October 29th, 2021 for settlement date October 1st, 2021. DTC will implement the following changes to modify the collateral value for certain securities, which may affect the value of positions applied to the collateral monitor. 1. United States agencies and GSE securities that are not rated rated AAA or AAA2, AAA or AA will receive a haircut ranging from 5% to 35%. Meaning, if you don't have top tier securities, we're talking Apple, we're talking Google, we're talking Amazon, top rated companies, then even then you're still going to receive a 5 to 35% haircut, meaning you're going to have to post an additional 5 to 35% collateral to your margin accounts. Now, those rated below AA will receive a 100% haircut. That means essentially, for reference, if you have $1 billion of margin, I'm just going to throw random numbers out. If you have $1 billion of margin, you have $50 million of collateral for that $1 billion. I know it's probably a little bit different. Bear with me. Then that essentially means you would have to put up an additional 100% on top of that. So you'd have to put up an additional $50 million to stay in all of your margin debt, essentially. So that is how you guys can think about it. That is the situation. This is being applied on November 1st, and there was not too much warning to this whatsoever. I cannot find the DTCC actually warning participants of this and that it was coming. And this does weirdly coincide with what we're going to talk about next. But let's just talk about the last thing on here, and that is number 3. Most securities with no active market prices for 3 consecutive days will receive a 100% haircut. Excuse me, I got heartburn really bad. This will apply to new securities during the initial issuance stage and to active securities where DTC has not received a vendor price for 3 business days. The only exception to this rule will be mortgage-backed securities (MBS) issued by U.S. agency or GSE. These securities will continue to receive 100% haircut if DTC has not received a vendor price the prior business day. And you don't need to know that last sentence. But essentially, what it is saying is there is going to be major margin calls. I don't know if it's going to cause shorts to cover. I'm not going as far as to say that, but this is another domino in the step to the MOAS. I think the ultimate thing could possibly be earnings. And why I say that, guys, is because if AMC is going to grow into its valuation like Adam Aron says, and they're going to branch out, and the real success story, in Adam Aron's words, the real success story of AMC will be looking back a year or two from now and seeing that the company pivoted their whole business model and they are much more than a theater play. If hedge funds get the sense that they're going to do something big and do something great for the company, they're pretty much going to be forced to cover on their short positions, especially if they're never going to go back down in value. Not all of these big hedge funds are short owners of AMC. There's a lot of smaller guys as well, and it's the smaller guys that will force the bigger guys to cover. The Citadel type large short positions, these simplex trading short positions, these big guys, they're not going to be forced to cover until the small guys cover. So those are going to be really the guys, the big guys like Citadel, that are going to be basically the icing on the cake to send this thing really home. And this is just another step in the right direction. 100% margin calls to a majority of these hedge funds and institutions. But keep in mind, November 1st, 2021 is the day before the Fed meeting, November 2nd and November 3rd, where Fed Jerome Powell is going to be, talking about the economic outlook, what he expects to happen. It's pretty much the same thing over and over again. Last time around, we did get an announcement that they could start tapering their bond purchases as early as this meeting in November. So a lot of, analysts, a lot of investors are expecting this to happen. Me, myself included, I expect this to happen as well. It's essentially stimulus every single month, pumping it into mortgage-backed securities, MBSs, and junk bonds in the market. I believe $80 billion of junk bonds and $40 billion of mortgage-backed securities comes out to $120 billion per month that is pumped into the economy to help it stay afloat and to ease some of that financial burden that may come about if junk bonds, went bust, those companies went bust, or just the mortgage sector started to slip a little bit. The Fed is basically a cushion to make sure that doesn't happen. Now, if the Fed does start tapering, when they start tapering, that will cause interest rates to go up a little bit. I am a real estate agent as well. I don't focus on that too much just because people waste a lot of your time, and your time is very valuable, so I don't like to waste my time or waste anybody else's time. So that's why I don't do it as much. I still do my own deals when I buy houses here and there and help family and friends and stuff like that. But anyways, back a couple months ago when the bond rate started to go up, that forced mortgage rates to go up as well. Some people even lost out on deals. So when they do start tapering, the interest rates will go up a little bit. I don't expect like margin rates to go up in your brokerage account or anything like that, but there could be a surprise rate hike announcement. Jerome Powell did that, a couple years ago, back in 2018, I believe, but for sure 2019, and that caused the market to freak out a little bit. If that does happen, then I do expect some volatility. Either way, there's going to be a reaction from the markets. This day and age, the markets might just blow it off and it won't be a big deal, but there's always a chance that we could slip to the downside. So I want you guys to be fully aware of that. As you guys do know, AMC does not necessarily have a negative beta when big catalysts like this happen. And specifically, we are in a realm of very low volume on the stock. So you're not seeing traders, you're not seeing anything like that. You're seeing hodlers hodling for dear life. And we all know AMC is about to rally. At least you do. If you are on this channel, you should be very encouraged. You should have your armor on. You should have your emotions in check. We are ready to make massive tendies. You want to be in AMC before we do start to rally, baby. That's exactly why I've been buying all of the shares that I possibly can, as well as, like I said, tending to my other stocks in my portfolio, like you guys should as well. AMC should not be 100% of your portfolio. I will be the first to tell you that, but go big or go home, right? So that's going to be all for this video. If you guys want access to all of my trades in real time, every time I buy a stock, buy stock in AMC or any other stock, whether it's a day trade, swing trade, or long-term investment, check out that link down below in the description of this video. It pays for itself over and over again. I think we're up like $5,000 in the last 2-3 months. Definitely check that out. That would pay for that cost for like 10 years or even longer. So definitely check that out. Link for Public if you guys want a non-payment for order flow brokerage that also has a social aspect of investing. Check that out. You can also link a debit card to fund your portfolio. Nothing like any other brokerage app. They make it very easy to fund your portfolio. So that is going to be all. You guys enjoy the rest of your night. Enjoy your Halloween. I will see you in the next one.